Hey guys, good afternoon. Happy Friday. Um yeah, I'm excited to be here with you guys. I was in the labs recording content and I said I might as well come live and teach you guys something. Y'all been begging, asking me. Well, I got dogged out on my YouTube channel the other day. Well, not really dogged out. Somebody was like, well, instead of you telling us what we shouldn't do, you should tell us what we should do. So, guys, if you guys don't know who I am, I'm Folasade, the accountability accountant, guys. I help entrepreneurs and individuals save money on their taxes, build generational wealth, and build profitable, scalable, and sustainable businesses. Okay. So, just to give you some context, guys, I've been giving you guys strategies for years. It's just that I stopped giving you guys all of these tax strategies because you guys start screwing up. You want to claim everything, but you don't want to do your bookkeeping. You want to write off your car, but you don't want to track your mileage. And so when I started to see people implement the tax strategies that I was giving them incorrectly, I have a conscience, guys. So I stopped and I started to teach you guys what you need to do to be able to write off everything. Okay. So now, you know what? I said, bump it. Y'all want to jump out there and just do tax strategies and stuff like that. So I'm going to give it to you guys. Okay. So I recorded like 13 videos for you guys today. I'm excited to get them out. And I said, okay, well, let me come live and teach you guys how to be able to write off everything on your taxes. Okay. So let's jump right in. And then throughout the session, guys, I can see on YouTube my Q&A and everything. Hey, Boomy, how are you? I can see you guys on YouTube as well. Okay, so yeah, so let's jump into it. First of all, I think I'm gonna have to probably start engaging with you guys because I don't want um how would I say, I don't want you guys to just take and then you don't know how to execute. So I need to probably figure out a way to engage with you guys a little bit more than what I normally do. Okay, so here's the thing. If you want to be able to write off everything on your taxes, right? First of all, we have to know what everything is. Okay? What are you spending your money on? Do you have proper records of those things? That is the first thing. And I know you guys hate it when I say this, but before I can do anything, I need you guys to have the records. This is why some of you want to save on taxes, you don't want to pay taxes, or you just don't know what's going on. It's because you haven't been tracking everything. So when you go to file your taxes, you're filing taxes on incorrect data. So you might pay more taxes. Okay. So first things first, track everything. Do your bookkeeping. Do it. If you can't do your bookkeeping on your own, hire a professional like myself to do it. So that's the first thing I need you guys to do. But here's what you all really need to do to be able to write off everything on your taxes. Before you just start spending money on things, because unbeknownst to you guys, it's certain stuff that you can't write off, right? Because it is not considered ordinary and necessary. So for you to be able to write off everything on your taxes, that expense needs to be considered ordinary for your business, ordinary for your industry, and necessary for your business and necessary for you guys to make money. So when you go to make a purchase, you need to ask yourself, okay, is this expense ordinary and necessary? Okay. And just to guys give you a disclaimer, I am going to have my team more than likely take this video off. And that's what I started to do. When I be giving y'all real tax strategies like this, I take them down. So I'm going to have to start doing that. I'm not going to post this on Instagram. So you might as well share it with your girlfriend now. It is not going to stay up there for hours like I normally do until my team go and get it. Okay. This may go into my subscribers. Or once my team break it out, they'll put some of it on my YouTube, but it won't be this, okay? So if you guys want this, you need to be sharing the video. Watch now. Take your notes because this video will be taken down. And I know my team is going to chop it up and it's not going to be this clear deliberately, okay? So before you guys go spend anything, you need to ask yourself and conceptualize, okay, what I'm thinking about. Okay, let me grab something really quick. What am I going to grab? Okay, let me just grab something really quick. Hold on, y'all. All right. So let's say, for example, you just so happen to have to buy, what is this, a speaker, right? A portable speaker, right? So let's say, for example, you have to buy this portable speaker. Before you guys just go and swipe, 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 swipe. Oh, I got it. Oh, yeah, let me just get the speaker. The first thing you really need to ask yourself, what is the purpose of this speaker? Why do my business need this speaker? Okay? So if you're going on like a company retreat or you're traveling with your team and you guys don't have any music, then this will make it ordinary necessary. You need something to entertain your team while you guys travel away for a speaking gig, or you may need this to play your intro music for your speaking gig, or you may need this expense for your marketing table if you're at an event. So before you guys sit there and just keep buying and buying and buying stuff, you really need to strategically ask yourself, is this expense ordinary and necessary? Because here's the thing, guys, and you may not know this. Just because you swiped it on the business debit card, just because you swiped that expense on the business credit card does not make it a legitimate tax write-off. And I'm going to say that again. Just because you guys pay for whatever you've paid for on your business debit card or on your business credit card does not mean that it is a write-off. That does not mean it's a write-off. If you guys were to get audited, okay, and you have to back up the expense, they're going to ask you, well, you know, I've had agents where they go into every expense that you guys had, and I have agents that don't. But the way that we're going into, the majority of the agents are going to go through your expenses. And they're going to ask you, oh, well, you purchased this at Best Buy. Can you provide me that receipt? Oh, okay. And then on the Best Buy receipt, if you have it, right, it will show that, oh, you bought this. Then the agent going to say, oh, well, you have an online business. Why do you need this speaker? You need to know what to say. Also, a lot of you don't understand, and goes back to what I originally came into the video talking about, is that I need you guys to do your bookkeeping and stuff, because what if you don't have the receipt? And remember, Best Buy and some stores, even these online stores, especially Amazon, guys, remember, you can buy business stuff from them, and you can also buy personal stuff from them. So the IRS is just not going to accept, oh, yes, I bought supplies from Amazon without showing receipts. Or, oh, I bought this from Best Buy without showing receipts, because you could have bought something for your child. You could have bought something for your spouse, okay? That does not back it up. This is why I asked you guys to keep your receipts, because those stores like Walmart, Best Buy, Amazon, you can buy personal stuff. So the IRS is going to ask you for those, okay? So to be able to write off everything, trick number one, you want to make sure you're accumulating everything. There's no way around your bookkeeping, guys, okay? And just to give you some context, if you guys were to ever get audited, the IRS may send you back to have a professional like myself prepare your books for the IRS to audit them, okay? So you got to be mindful of that. The second thing you guys need to do is just ask yourself, is this expense ordinary and necessary? If you can prove to the IRS that yes, this expense was purchased for your business, and yes, this expense was ordinary and necessary, they will accept it. They will accept it. But if you don't have no records, you can't explain and illustrate to, why is the camera jumping? You can't explain and illustrate to the IRS why you purchased that expensive product or why you did something, then we have an issue. Okay? So that's the thing. So now I'm going to go into some of the expenses that I know will trip some of you guys up, especially in the landscape that we're going in right now with the increased IRS agents, the increased compliance and everything. So many of you have started your business because you were told to start the businesses to get them PPPs and everything. That's between you, boo, right? Whatever you done. That's between you and your God, right? But the issue is this: some of you also started your business because you've heard tax professionals, not me, okay? You've heard tax professionals say, oh, you can write off this, or you've heard a coach say, you can write off this, or start an LLC. Everybody say, start an LLC, start an LLC. Guys, can I be honest with you? Just starting that LLC does not give you the right to write off expenses above the income for that LLC. So if you made $10,000 in your business, okay, and your expenses was $30,000, then if it was a hobby, you cannot write off the excess expenses. If you cannot prove that you're operating that business for profit, then you cannot write off the expenses above your income. Now, if you can illustrate to the IRS that, oh yes, I started this business to make money, I'm doing what I need to do. See, a lot of you guys are not even doing what you need to do. You're going to mess yourself up. So they will assume that you started that LLC just for the write-offs, especially if you don't have any income. And so for all of you guys, because I'm still seeing that now, where you guys have these businesses for 2 and 3 years and no income. Tread lightly, because remember, those losses from those businesses increase your refunds. Okay, so the IRS can say, you know what? No, you're just taking those expenses to increase your refund. So number one, you want to make sure you do your bookkeeping. Number two, you want to make sure that you evaluate your expenses to make sure that they can be considered ordinary and necessary. Okay. And then third, start the business because you want to make money, provide a service, and be your own boss. Don't just start these businesses just to be able to write off things, because you won't be able to. You have to have a profit motive behind it. So for you guys to be able to write off everything, we need to have a profit motive. We need that expense to be considered ordinary and necessary. And we also need you guys to have the records, which is considered your bookkeeping and proper record keeping. Okay. So if you find yourself just spending in your business, after today's video, I hope you understand that all of that may not be a write-off depending on your circumstances. And we're going to go into the coaching. Some of you are paying for an enormous amount of coaching every year, okay? And you're paying for different types of coaching, okay? So you may have one business and then you're paying for coaching to learn how to do real estate. And then you're paying for coaching on how to do credit repair. Guys, you cannot write off educational expenses to start a new career or business. So if you know you are starting this business and you have educational expenses that you need to incur, get the business off the ground first before you incur these costs to start that business or to learn that business or to familiarize yourself with your business. So that's just like me. When I transitioned when I wanted to become an enrolled agent, right? The cost to become an enrolled agent, because I can represent the client beyond the capabilities that I was prior to being an enrolled agent, the cost to take the exam and the cost for the course, I couldn't write it off. But because some of you don't know that, I know that you started that business last year and you just learned about that business last year and you want to be able to write it off. But to be able to write it off, I strategically told you guys how to do it, okay? You want to get the business off the ground first, get it going, and then invest into those type of educational programs, okay? So guys, to be able, and this video is going to be really quick because I want my team to be able to chop this down quick. So to be able to write off everything, we need to do your bookkeeping, have proper records, okay? Because here's something to consider. Just because you put it on your taxes does not, and the IRS accepts your return and even sends you a refund, does not mean that they approve or you were able to write that expense off. No. What proves whether or not you're really able to write that expense off, and I see some questions on over here on Facebook and YouTube, is if you were to get audited and they say, oh yeah, we accepted that. Oh, we don't have any problems with this expense. Oh, just show us proof of that one and then we'll accept that expense. But just because you guys place it on your tax return does not mean that it's a guaranteed write-off. So I'm going to read some questions on here. Somebody said, Bunny said, Folasade, I'm a new Amazon author and an official tax preparer said I can use a regular separate checking account, making sure that I'm tracking my expenses and income. Yes, you can use a regular account, but if you're an author, you're trying to sell books and you're going to be traveling and doing speaking gigs, I recommend just start your sole proprietor. You can do a DBA and then get an actual like business account and do it that way. But as long as you guys make sure that you separate your expenses and separate the business from personal, whether you're an author or independent contractor or whatever the situation may be, you'll be good to go. But if you cannot get a business bank account, then I do recommend you do what you're doing, Bunny, and get a regular account and use it strictly just for business, okay? Somebody said that she don't need a business account. Also, should I get an EIN as a sole proprietor and not an LLC until I make money? I'm going to be really honest with you guys. You guys really have to know what your goals are for us accountants, especially myself, to fully serve you. Here's why. If you And guys, this is your Q&A session as well, okay? So just to give you guys some context, if you want to pick my brain, my hourly rate is $500 an hour. So this is your opportunity to come and ask your questions for free. If it's anything that I'm uncomfortable discussing, I will say I cannot discuss that with you, but this is your time. If you want to be able to pick my brain, remember my hourly rate is $500 an hour now. So this is your time to kind of bypass that. So post your questions as well. So here's the thing, guys. What I'm finding is that you guys don't know what you want yet. You don't know if you want to be an author. You don't know if you want this business to be successful. You don't even know if you want to own a business. You don't even know if you want to speak. You don't know. So here's the thing. Before you just jump out there, get LLCs and EIN numbers and making yourself responsible to file and stay in compliance for your business, I recommend you guys have a hard sit down with yourself and ask yourself, what are you trying to do? Are you trying to be an author and then eventually just be a full-time author and travel the world doing speaking gigs and eventually create a coaching program from your book or something like that, and you know that's what you want to do and you sure you want to build that business? I would say just get the regular LLC. It protects you for liability purposes. When you're traveling, they will be able to pay your business. Like it's very professional. And yes, you'll be set up as a legitimate business. But if you guys are not sure as to what you want to do with your business, what direction you need to go into, I don't recommend you guys make any investments into any LLCs, any investments into anything. This is why I'm finding that so many of you start these businesses and hire every coach over the sun looking for purpose. You guys have to establish the purpose first and then contact me and then contact your coach, and then we can help you from there. But you guys are having us pull out your purpose, having us create your program and do everything for you. And this is why many of you are struggling. So first of all, before you guys just jump out there, get LLCs and do all of this, establish what you guys want to do. Do you really want this business? Do you want to be a business owner? Do you want to be an author? Do you want to do what you're doing? And then if you're really sure, start where you are. When I started my company, guys, I didn't start off with an LLC. I didn't. I did a regular DBA. It was just $100. And I started my company with Suncrest Insurance Agency. I was just an insurance agent at that time. Okay, and I was still in school getting my undergrad, my bachelor's in accounting. So I had Suncrest Insurance Agency, and I just did a regular little DBA because I wasn't really sure if I was going to take over my dad's firm or start my own firm or whatever the case may be. I wasn't sure. So once I started getting sales and growing the insurance part is when I ended up getting my LLC. So it was Suncrest Insurance and Financial Services LLC, right? So at that point, I think it was maybe a year and a half after I got my DBA, okay? I always had business insurance. So never get a DBA without business insurance, okay? So I did have business insurance. And then within a year and a half to 2 years, that's when I went and got my LLC. And then also, look, I didn't change the company name again to Suncrest Financial Services because I'm no longer doing insurance. So what am I saying? Know what you guys want to do before you start to really jump out there and put these costly expenses on your back that you will have to stay in compliance with, okay? Because if you guys get these LLCs, especially LLC S Corp, LLC partnership, or a corporation or whatever, right? You guys still have to file your partnership return, your S Corp return, and your corporation return regardless of if you make money or not. So you're going to always have recurring annual expenses because you wasn't sure about that business, okay? Alrighty, so guys, this is your Q&A session. So post your questions as well. I'm here for about maybe 10 more minutes, and then I got to get out of here. Aloy say, how did that matter when it came to your taxes prior to getting? It actually matters a lot. First of all, if you don't have an LLC structure, I cannot convert you to an S Corp or a partnership or a corporation to help you save money on taxes. So I've even had clients that started out like I did with the DBA, but made money quickly and never converted to an LLC, and it messed me up for tax purposes because I couldn't convert him to an S Corp. So having the LLC, yes, it does impact how you're taxed because you cannot take a DBA to a partnership, a DBA to an S Corp, a DBA to a corporation. A DBA is not a business. So for me to be strategic, yes, I will need that LLC. But before you guys get these LLCs, don't get them just for tax write-offs. Make sure you get them because you're trying to build and create a functioning, profitable business. So it does matter, okay? And I've even seen a client of mine pay over $60,000 to $70,000 because of the structure of the DBA. And I couldn't take them to an S Corp and put them on payroll, okay? You're welcome, Bunny. Okay, guys, so y'all have about maybe 5 more minutes. Oh, great. Yes. So here's the thing, guys, and I'm going to touch on this because Faith is saying that she's an S Corp. Congratulations, Faith. So just some of you may not know this. If you guys do convert your business over to an S Corp, you are required to pay yourself a reasonable compensation. I'm seeing so many professionals tell you guys to convert your business over to these S Corps, but they're not telling you that you have to put yourself on W-2. You have to. If your business is making money on that S Corp and you actually perform services for that S Corp, you're supposed to be compensated. So this is why this is why I don't necessarily recommend everybody become an S Corp, because it doesn't it's not financially feasible for everybody to be an S Corp. Some of you guys don't make enough money. Some of you guys don't keep enough money to maintain an S Corp status. But if you are an S Corp, please be mindful that you have to pay yourself on payroll regardless. I don't care if your business didn't make any profit, you still need to pay yourself because the IRS is looking at you as a separate person from your business at that time. So what they're saying is that, okay, well, you're doing this for the company, and the company is making money off of you doing this or benefiting from you doing this, then you need to be compensated and reasonably compensated for the said services that you're performing for the S Corp, okay? So make sure if you're an S Corp, you need to be doing payroll. And I'm seeing that 90% of the S Corps that I'm seeing are not doing payroll. Okay, so make sure you're doing payroll. Okay, guys, so I think I've done enough for today. Recorded you guys quite a bit of videos, and I did my live stream for today. So if you guys have any questions, last call. Last call if you guys have any questions, if you need clarity about anything. But yeah, I gave you guys exactly how to write off everything. Now, the ordinary and necessary thing is very tricky. So this is why I recommend, if I'm not your accountant, please consult with your professional. And if anybody is telling you guys, just start them LLCs to write off things on your taxes to save money, please do not fall for that, because you are the one that's going to be responsible to pay that money back if the IRS was to get a whiff of it, okay? Not them. And you will not be able to tell IRS, oh my gosh, that person online told me to do that. The IRS is going to say, well, you're taking advice from somebody online without asking for your personal situation. So please be mindful that everything with taxes is on a case-by-case basis. Just because your friend received a refund of $5,000, that does not mean you're supposed to receive the same refund. Or just because your friend owed $15,000, that doesn't mean you are supposed to owe $15,000 as well, okay? Okay, guys, so I think I'm gonna go, and I have like 3 more videos that just came in my mind that I'm gonna record for you guys for today. And then that's it. Any questions before I go, guys? Last call. Last call, last call, last call. Okay. Well, alrighty, guys. So please take into consideration that you can almost write off everything if it is considered to be ordinary and necessary for your business, okay? And it's a broad strategy with that, and the IRS have not even concluded, definitively what basis they're going to use to even say that your business can write it off, what's ordinary and necessary, okay? All right, guys, I love you guys. I will see you guys sometime next week. I know I'll see you guys on Tuesday on the Money Zone on Beltway Radio. And if you guys are watching me on YouTube and you enjoyed today's content, please like the video and please subscribe to our channel. Yeah, we're doubling down. So bye, you guys. Bye, y'all. Oh, I forgot to do the loop. Hold on, y'all. Y'all didn't call me. Let me do the loop.